There's some big instruments hitting magazine covers across the globe. And you know what that means? Well, I think I know what that means. And I know Jim Welsh from Macro Tides. He's here today on the Trader Summit to talk about what could influence the market and maybe even get some of these assets to reverse. So let's talk to Mr. Jim Welsh from Macro Tides. Jim, how are you?
I'm good, Blake. How are you doing?
Doing great. Matter of fact, let me bring you on in here. I was trying to bring you into the show. Happy Friday. Thanks for joining us. And if you guys don't join us every Friday, I always have Jim Welsh here from Macro Tides joining us here on the Traders Summit. Jim, it's been a crazy week. Some of the things that have gotten my attention this week are things like NVDA, Bitcoin, Treasury Secretary nomination, Matt Gaetz, which I think we talked about this last weekend, that kind of pulled himself out of the way. There's a lot of things that are a lot of moving parts in this market. I have a feeling the next 4 years there are going to be a lot of moving parts in the markets just in general. So how do you feel about this week in trading?
Well, NVIDIA was a huge focus for equity traders because it is the largest capitalization stock on the planet. I think its capitalization is more than all of the Japanese stock market, bigger than all the German stocks. So it just puts it in perspective. And, there's a fair amount of enthusiasm. So my point on Monday when I did the weekly technical review was, the odds are their numbers are going to come in good. The question is, how does the stock trade? And if the numbers come in good and the stock doesn't pop, or instead, we see some selling pressure come in, that I think is a tell potentially for not just NVIDIA and for the overall market. In terms of, overall economic data continues to come in pretty positively. And in terms of, the nominations that President-elect Trump has made, to me, again, the observation is the focus is on 3 or 4 of the people that I think are questionable, as opposed to the 9 or 10 other people that truly look capable, and that people are like, wow, okay, that person is a good choice. But again, the media is going to focus on whatever blemish they can find about Trump. And Gates was, to me, when I heard that announcement, I'll be honest, I thought, are you kidding me?
I mean, I think most of us were, Jim. But let me ask you this, because I know you follow Fed speakers quite a bit. How do you feel about Kevin Warsh? Because it looks like, he's going to bring him in as Treasury Secretary. Then the word on the street is that then he's going to transition into the Fed chair role once Powell is done. How do you feel about Kevin Warsh?
Well, I think he's a good pick. At the same time, to me, he's a nerd, which maybe is a good thing. But he understands.
Jim, you're a nerd. You're a nerd, Jim.
Yeah. Well, thank you very much.
I'm a nerd. I'm a nerd. So.
Yeah, but he understands the piping in the financial system, and that's an important quality to have in a Treasury Secretary, because if we hit a rough patch, he has the capacity to understand maybe what buttons to push, as opposed to somebody who doesn't have that same quality. So from that standpoint, I think it's a good pick.
All right. Well, Jim,
I think I know have some challenges. So.
Okay. Well, I know you got a lot of charts to bring, and I know we're gonna talk about all of them. And I think you're right. He's a good pick, not non-disruptive. Keep the party going as far as Trump is concerned, because that's to him, it's like that's a benchmark for him, right?
Yeah. And the other thing too is he was critical years ago of tariffs, and so if Trump reaches out to this guy who, because one of the big criticisms that a lot of people have made is, oh my God, he's only picking people that are 100% loyal, blah, blah, blah. And, so if he includes somebody who has been critical of some of his policies in the past, I think that would be constructive, because it would show he's going based on the qualifications, not whether this person is a yes ma'am.
Yeah.
Or yes, sir, I should say, not yes ma'am.
Yes, ma'am. Yes, man.
Yeah. Now, Tulsi Gabbard, to me, I'm not enthusiastic about that pick at all. I hope she doesn't make it through. for various reasons we don't have to talk about it, but her criticisms in the past of Trump aligned with Biden and the Obama wing of the Democratic Party regarding Middle East policy. I think those policies have gotten us to where we are in the Middle East. So for me, I hope she doesn't make it as well. But anyway,
Well,
hopefully Warsh is the guy.
Yeah, that's good. Okay, well, I think he's a good one of my colleagues called him a steady hand. Is going to be a
Yeah,
steady hand at the
yeah,
Treasury, which is it's going to be good for markets. So
yeah.
now that doesn't mean that the markets are can avoid any type of setback or pullback, or the economy can. But as
Yeah,
far as market participation goes, the market's going to view him as favorable. Good,
capable. He's capable to handle
capable.
the
All right.
job. And we're at a time when obviously things like the deficit, the amount of paper that's going to be floated in the next handful of years, you're going to need to have somebody who understands the plumbing of the system, and he does.
Yeah. All right. Well, good to know your opinions there. Well, let's get into the first chart that you brought,
Yeah.
and I'm gonna pull this up right now, and tell us why you got a piggy bank here.
Well, okay. Let's look at the outcome of the election and the economy based on all the polling and everything else was the number one issue. Granted, there were other issues, obviously the border, abortion, and other aspects, but the number one issue, which typically is the case when you get to election, is a pocketbook issue. And my only point here is what we do know now is that Trump was able to tap into the angst that a lot of folks who are, let's say, in the bottom 50% of the income spectrum have been feeling. And one of the reasons is the government distributed a lot of money in 2021 and 2022. And for a lot of those people, let's say the bottom third of incomes, they've gone through their excess savings that they got during COVID time, and they've been forced to deal with a much tighter budget problems. If you don't own a house and you're paying rent, hey, you're feeling the pain of the big increase in rent. If you have a car, you're paying the insurance surge that we've seen. So my point being is one of the reasons why Trump, I think, won was because a lot of people who have traditionally voted Democratic, say, wait a second, I'm not in such good shape. And I do remember when Trump was president, I was in better shape. Whether that's valid or not in terms of the next 4 years is secondary to the fact of that is the main reason why I think Trump won was because a lot of people, have been under the gun and they decided to vote for a change in counter to what they have previously, voted for.
And Jim, I don't want to get into politics here, but I have to admit that Kamala Harris she ran a pretty damn good campaign considering what you're pointing out right now. Everything
Yeah,
any incumbent that is dealing with massive inflation surge is really their back is up against the wall. So to be as close as the race was and being a relatively unknown and a VP who is, just part of this administration, I think that really, I have to admit, she did run a pretty damn good campaign. But you can
right.
see exactly why she lost and Trump won.
Yeah, that
Yeah.
this is one of the reasons. And the other reason, and in terms of strength of her understanding of various issues, it's extraordinary, at least it comes across, in my view, extraordinarily shallow. And I
Yeah.
think that was another thing that convinced some independent voters to hold their nose and vote for Trump. At the same time, she benefited from the fact that it's easy to dislike Trump, find him somewhat disgusting, given some of the history. And the other thing is, I think most of us, I grew up, I'm older, so I grew up when the idea that a president acts presidential and holds the world stage and commands respect. Obviously, Trump doesn't fulfill that in the traditional sense. And so, for a lot of people, the vote for Harris was more than anything else a vote against Trump. And so, I think, that's in part why the race was as narrow. and
Yeah.
some of the things that happened the last couple of weeks of the campaign, he did himself no favors. But the numbers are that he won a convincing election. Is it a mandate? I don't think so. I think we talked about this last week, in that people are assuming because the Republicans have the White House and the Senate and House, boy, everything he wants to do agenda-wise is going to sail through. I don't think that's going to happen. I think there are Republicans, conservative Republicans, that are fiscally responsible. So some of the budget tough stuff, Blake, I think it's going to be more difficult. They're going to want concessions, and they have leverage because in the Senate, it's what, 3 votes, 4 votes, and in the House, it's just a little bit more than that. So anyway,
It's pretty
I just think
narrow.
a lot of things came together for his victory. This is one aspect. People vote with their pocketbook. They've been under the gun because they ran out of savings. They're stressing about getting, the rent paid, food on the table, and so forth. And the next chart, kind of addresses that additionally. And, Main Street, the lighter blue line, which goes up from left to right, is the cumulative increase in the CPI. And again, it understates things like rent, car insurance, and so forth. But it gives you the main idea. The other line is the annual rate of change in the CPI. So yeah, it was up to 9%, and now it's down to, around 2.5%. Wow, it's so much better. But the average person is dealing with that lighter blue line in terms of when they meet, every month I got to come up for money for these various things, and it's become a lot harder. And to me, this is the other economic issue that has been squeezing people, and why we saw a defection from the traditional voters that typically always went in a wide a plurality toward the Democratic Party. We saw shifts of 10 to 20% toward Trump. Whether it's justified or anything else, the reality is this is what those people have been dealing with and why they voted the way they did.
All right. So let's talk about what is this about Walmart?
Yeah. Well, again, it's clues. You hear the news and wow, Walmart did good and Target got crushed and so forth. But the thing I drew out was the CEO said, okay, in terms of us increasing our market share, where did we increase our market share? It's with people earning more than $100,000. In other words, these aren't the people in the bottom 30, 50% of the income spectrum, Blake. These are people that are north of median income of around 75,000. And what's happening is they're starting to feel enough of a squeeze to trade and go to Walmart. The other thing is convenience. You can basically do all your grocery shopping at Walmart in addition to other things you may be shopping for. But to me, this was noteworthy because it builds on the idea that what we're seeing is slowly but surely weakness, spreading from the bottom 25, 30% of the income earners in this country, and it's going up more and more and more. We're seeing big increases in credit card delinquencies, auto loan delinquencies, again, bottom up type stuff. But, we're still growing at 3%. What will happen when and if we see the economy meaningfully slow down? To me, these are signs that if indeed the economy slows, we're closer to a tipping point than I think most people realize when you look at some of these other, aspects of why people voted the way they did and the pressure they're feeling from the economy isn't quite as positive as, the headlines would show, so to speak.
Yeah. All right. Well, speaking of headlines, next is your magazine covers. So what is going on here?
Well, here's just, it's kind of like from a being observant. I'll tell you a story. About 20-some years ago, you may remember that cigars became, it was the dot-com bubble. And there were restaurants that opened up special rooms where you could go and smoke cigars after a fine meal and everything else. And I remember, and I like having a cigar. So, I was kind of tuned into all this good stuff. And I walked into a 7-Eleven. Every Saturday morning, I'd go to the local 7-Eleven to get my bearings. And I walk in, and on the counter is a one of these plastic containers of cigars. And I looked at that, and my conclusion was, the cigar craze is peaking. And so this isn't this, and it did, as a matter of fact.
It did.
So the point is, by the time an economic trend makes it to a cover, it's been in place for a long time. And as more and more people jump on the bandwagon, it finally gets to a point where a magazine decides to slap a cover, and then they're going to project the recent past into the future. So the dollar, oh, envy of the world. Well, that has obviously got amped even more after the election because of some of the perceived Trump policies that people think are going to goose the dollar. And then Barron's last week had NVIDIA on the cover. And there's, again, great company. The demand for their products is going to continue for a period of time. So my point is, these aren't precise timing tools, obviously, but it gives you an idea that, okay, we're in a zip code of a dollar high. We're in a zip code of a high of some magnitude in NVIDIA. And so to me, this is where paying attention to stuff in the world and instead of reading, oh yeah, man, NVIDIA, ooh, wait a second. This is probably telling me that there's too much enthusiasm, too many people jumping on the bandwagon, because that's why it's on the cover. And so it's a kind of a way to turn covers of magazines inversely.
Yeah.
Instead of being caught up in what the magazine cover is telling us, instead being, whoa, wait a second. Maybe this is a sign a yellow light is flashing. And I think
it's kind of like when Jim Cramer says you should be buying something. I'm just kidding. Sorry, Jim, if you're listening. Totally joking. Let's go into your first chart. Speaking of the dollar, you want to give a technical view of what's happening with the dollar because it's gone freaking berserko. And I know it's U.S. exceptionalism is half the story, but is there more to it?
Well, again, just from a chart standpoint, last week when we talked, I said, hey, can make a target for 107.80, 107.93 were two, targets. And, the idea being that we were going to get more rally, which obviously that's what's happened. Some of the rally spike today was based on weak economic news out of Germany, which caused the euro to get hit. And the euro is 57% of the dollar index. But from a technical standpoint, what we talked about last week was if you go back to the low 18 months ago, or whatever that is, I can't see the small print, the 99.58, big rally up to 107.34. I think that was wave A. And what we've had is a decline to the 100.52, a rally up to the 106.52, a decline to the low 5 weeks ago at 100.6. I think that was wave B, and this is wave C. And that was where the target came from based on that pattern. And so it's like, okay, we're there now. The dollar got to 108.07 this morning on Friday. And now we have to wait to see if indeed we see things start to roll over. The dollar has peeled off, a decent amount from that high. The euro got hammered on news. So again, to me, this suggests that we're nearing a high technically on the dollar index, but from a trend following standpoint, again, the 5 and 13-day exponential moving averages, the red and green lines, hey, the trend is still up. So we've come to an important price level. Now we need to see price start to confirm that this indeed is a high.
So in other words, don't stand in front of the dollar just yet, but we got to be waiting to see if this is a high.
Well, if I haven't been long the dollar, I thought we'd have this one more pop, but I wouldn't go short yet. That type of thing.
Yeah.
If I was long, I certainly would be scaling back position because again, it got to a price target. Well, when something gets to a price target, it's time to take money off the table. That's why we do go through these exercises.
Right. All right. Well, the next one that has reached some recent price targets, but looks like it's back on the move is gold. So what do you make of this move in gold?
I think it's near a high. We talked last week. What I put forward is that the high we saw at 27.89 was wave three. Now we're in wave four. Wave four, time-wise, should approximate wave two, which was between 4 and 5 months long. So what that implied to me is that, all right, that sharp break, and I had a target of 25.67, which we had talked about a couple weeks ago. So it got to 25.41. Last week, I think, okay, we're going to get a rebound up to 2,700. Gold is going to retrace a big portion of this recent decline. And I think that's wave B. And then I think there's another leg down. And if the two legs were equal, it was 240 some dollars, 241 down. And you
Yeah.
get to the high today was 2708-ish. And that's where the 2467. And then you look at the chart and say, wow, there was a high just above 2,500 and some lows just below 2,500 during August. So there's some real chart congestion, which also should be support. So that's my take, Blake. I think we're going to see another leg down to gold pulling back. And again, the bigger picture is this is wave four. Once this correction is done, I think gold goes to new high. If it lasts about as long as wave two, we're talking about sometime maybe in February that this low happens. But one has to look more at the form than time per se. So if we see another leg down and gold trades down near 2,500 or so, to me that'll be like, okay, if it happens in January, you got to look at it in terms of a buying opportunity.
Well, Jim, the other juggernaut out there has been the S&P and stocks just in general. What do you make of this move? I mean, do you sell this rally? Are we going to make new highs? Where are we
I
at?
think, yeah, I think we're going to make a new high. The
Oh,
very short term is I think there's the potential that from the high at 6,017, and again, a couple of weeks ago, we were talking about, okay, things were set up for a 2 to 3% correction. We got that pullback. I thought we'd see a bounce. We've gotten the bounce. It looks very choppy. I think the way NVIDIA traded after their earnings and so forth, I think there's more weakness there, which means the semiconductor, I think, average is vulnerable. If the mega cap stocks have another bout of weakness, I could see where that could pull the S&P down close to that 5,800, 5,820. Again, I think there's one more pull rally that takes us above that 6,017. And if and when that happens, it's like, okay, what's the technical landscape look at that point? What's the advanced decline line doing? What are other momentum indicators doing? Are they confirming a new high or not? But I just think short-term things are set up for maybe a quick decline. Now, next week is Thanksgiving, and historically, seasonally, the day before and after Thanksgiving are pretty positive, are seasonally positive. So we'll see. That's my take. I think there's more selling pressure likely to come in to NVIDIA in the tech stocks. And, as now interesting what's happening again is the Russell has had a couple good days. The idea again being, okay, let's get out of these high tech stocks and rotate into economically sensitive stocks because we're really convinced the economy's on really firm footing. And if you look at the spreads between treasury bonds and corporate bonds, junk bonds, they're really, really narrow. Going back to like 2006 type of narrowness. So again, what we're seeing is the belief that we don't have to worry about the economy slowing. And as a result, you want to have cyclical stock exposure, of which the Russell 2000 would obviously be part of that equation. But again, my take is I think the economy is going to slow as we get into next year. I've been saying that for a while. The economy's held up. I think the main reason has been this year, the government ran a deficit of 6.4%. The economy grew around 3%. That deficit is enormous, in terms of
yeah.
supporting the
A lot of
economy.
tailwinds. Yep.
It's a big tailwind.
Yeah.
and in the third quarter, I think spending increased over 9%. So if you're in office and you want to get reelected, you tell every government agency to spend money. And that, I mean, 9% increase in the third, that's huge. So anyway,
Well,
we shall
Jim, the
see.
last chart you brought, this is if anything, this is a sign of you thinking there's going to be some risk aversion. I
Yeah.
mean, TLT, it's been down quite a bit, but you think
Yeah.
it's going to bounce.
Yeah, I do. And, I've been early in terms of thinking that we're going to see a turn to the upside in terms of TLT rallying, treasury yields coming down. But this is the pattern that I think is the technical justification for anticipating what could be a rally above 101.64 in TLT. And over on the left-hand side, last October, the TLT made a bottom at 82.42 after declining from 179.70, an enormous decline. And it then had a very sharp rally to the end of December of last year, the 100.57. And I think what we've seen since then is an A down to 87.34, B up to the 106.64, and this is wave C. And sentiment on bonds is really negative. I mean, people are just, and that has increased, almost, I'm going to say exponentially, but it's increased a lot since the election. And yet, if you look at the chart, this is a weekly chart, you can see that TLT isn't falling out of bed despite the election. It's not rallying, but it's not getting hammered. So this pattern does allow for TLT to drop down towards that 87.34, the low of wave A. It's possible. But I believe that one would be best at this point in time being short bonds, I think is crazy. So we want to look for a momentum reversal where we see bonds start to act better. And it's going to take economic data that comes in, obviously, that doesn't meet expectations. I mean, but initially, what'll happen is if we are going to get a rally to above 101.64, Blake, and it's a C wave, you'll get a one up, two down, and then a big move up. Well, that big move up is when the data is probably going to show weakness. So I think initially you're going to get some pop for wave one, and then that pullback where, okay, the economy still looks okay. So it's going to take a little time, but I think the odds are we're going to see treasury yields come down, and the main reason why they would come down is because the economy slows. I mean, some of the things that President Trump wants to do in terms of, tariffs and all, they're not economically friendly. You want to
Yeah.
lay off, hundreds of thousands of government workers. Long term, that might be positive, but near term, there's economic ramifications
Sure.
to some of that stuff. Okay, so I just think that right now everyone's so focused on the bright side of what the promise is, at least what they believe the promise is regarding Trump, as opposed to considering, okay, it's like all the medicines we take. You got a problem, you take some medicine to solve the problem, and then you look and there's a laundry list of side effects. And so to me, no one's thinking about the side effects of what Trump is proposing. But there
But
will be
but
side effects.
but at this there will be, but at the same time, couldn't we have a couple more months of this, what you're seeing right
Yeah,
now? I mean,
yes, yeah.
realistically.
No, I agree. Again, I think the S&P in all likelihood is going to make another rally and go to another new high. All right, so that would jive to that. The dollar doesn't necessarily have to keep going up. It could chop sideways for a period of time. And after such a big move, that would kind of be what one would expect. As I said, treasury yields, they may hold where they are. We might even see treasury yields creep a little bit higher in that backdrop and TLT get down closer to that low in April. So I agree with you. The charts are supportive that, all right, folks, even if things aren't going to turn out the way everybody expects in the very near term, um, I think things are set up that we're not going to see a reversal
Well,
of
Jim,
all that.
one thing that we've all learned in the markets is things can happen really fast and unexpectedly. So
Yeah, I mean, again, the
so
stuff that's going on with Ukraine. I mean, again, you look at Joe Biden, and it was determined he wasn't capable to run for president. I mean, we all saw that over the last year, his mental capacity and everything else seemed to decline rather notably. And yet, he supposedly just said it's okay for us to send long-term missiles to Ukraine and strike inside Russia. I mean, that's kind of an extraordinary thing. I mean, if you think about it, if if somebody did that to us, I think I know what our response would be. And so right now, everybody thinks, oh, Putin's just bluffing. But there is a risk, it may be very small, that he does use a tactical nuke. Like, okay, you guys want to play games? Take this. So I don't think that can be dismissed.
yeah.
Like, and so would that have an impact on markets? You bet your bippy.
Yep. Sure thing. Well, let's hope that doesn't happen.
That doesn't happen.
Let's pray for the best.
Yeah.
So, guys, gals, if you enjoy having Jim here every Friday, give him a thumbs up. Jump down in the comments below. He reads the comments, and I urge you, if you want to get his most recent technical review, you email Jim at
Jim Welsh Macro at Gmail.
There you go. So, Jim, I appreciate you every Friday. I'm going to look forward to, well, next weekend, I will not be able to meet with you since it is a holiday week. So we'll see you in 2 weeks.
You got it, buddy.
All right,
Have
Jim.
a great Thanksgiving, you and everybody else. And those abroad, go out for a good meal.
Yeah, enjoy a couple days of not having the Americans around. All right, happy Thanksgiving, everybody else that celebrates it, and we'll see you in 2 weeks. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.